Good morning, and it's good to be here. Bill, thank you for that introduction, and your firm has been extremely helpful in helping us form a solution both at our company and industry that we're working on the mortgage area, and we continue to work to try to get that behind this country. And thank you for all the help and all the other work you do for us. It was interesting, I spoke last week to a law firm, competitor, Bill's annual partner, and they had about 800 people there, so I guess when you have as much litigation going on, we're pretty popular among the lawyers these days. I want to thank President Joe for his commitment to what he does for this community and what his university does for this community, including things like this, obviously, to bring the business community together. The unique nature of the co-op program, which I knew about when I was going to college, and I'm sure all of you knew about when you were going to college, and its impact on American business is very strong. And to hear his plans as he's internationalized that around the world is quite fantastic. And even brought it to Charlotte, where we'll be served well by, in our business community in Charlotte, to have the capabilities and professional degrees and the continuing education in areas that are important, like cybersecurity and general business and things like that. So thank you for all you do. As you know, Northeastern started in a branch of the local YMCA, and so obviously from a branch of YMCA to where it stands today is quite an impressive run, and I'm sure you, as a person that sits on top of an institution of its magnitude, and share with me, sits on an institution that's been around 230 years. I like belief in that you're here for a short period of time, but it's fun to sit and realize what your predecessors did to get you here. Let me just talk about a couple things today. I think we're going to talk about the economy. I'm going to talk about the mortgage business and talk about where banks are, and then most importantly, I'm going to take your questions because I find usually what's on your mind is more important to try to give some insight to. But before I do that, I want to recognize we have 7,000 teammates that work for us in Massachusetts. The leadership is Bob Gowrie, who's here in front of the room. If all of you don't know him, then Bob's not doing his job. Let's just say that. And so I won't embarrass Bob by asking if you do know him, but Bob does a great job for us, along with Ann Finucane, who is one of my senior colleagues in the company, in leading the markets here in the Northeast and particularly Boston. So we are invested here. We continue to live up to all the commitments that Ken made with Chad at the time we did this transaction 8 years ago, and we'll continue to be here for a long time. There's a little story that makes the point about how committed we are to the community and what we're up to as a company, and that was in 1784. Our company's earliest predecessor was founded here in Boston by a bunch of merchants, not business people, not bankers. They were people who came together and saw the need. So they wrote to a banker in Philadelphia named Thomas Willing and asked him advice on how to run the bank. And Thomas Willing came back and said, "The world is apt to suppose a greater mystery in this sort of business than knows that really is." So that's what I'd say to my teammates every day about banking. What we do is not complex. We do something that's fairly straightforward. We serve three groups of customers: people, companies, and institutional investors. We bring them the core products, and we help them live their financial lives. And so we will make it complex, so all these guys will get paid a lot of money. We know that, but the reality is what we do is straightforward. We help you and your companies and you as individuals and you that work in the investment community like Bob Reynolds here, help you live your financial lives, bring the ideas, and help do that, and that will continue to do. So let's talk about the economy. The important thing is that the economy continues to move forward and recover. During 2010, we made progress. We have seen some pullback in estimates of people's views of growth for this year. I spoke with a group of Joe's colleagues in his business, Joe Petrowski here from Gulf, earlier this year. And I think earlier this year, late last year, we would have been about 3.5% growth for this year. We're probably now closer to 2.5% to 3% growth in GDP for the rest of the year. What's held that back? Obviously, some of the price inflation, the oil, and other things are holding back a little bit of growth. But let's talk about what's going on fundamentally. New jobless claims have come in under 400,000 many weeks in a row. Now, new jobless claims are people filing for unemployment for the first time. The lowest that ever gets is 250,000 because it's just a natural churn in the economy. So we're getting close to the level where people filing for unemployment have gotten to the cycle lows. And 250,000, 275,000, that's in 2003 and 4, pretty good time in terms of employment. The second thing happening is unemployment starting to drop. We've seen it drop to about a little over 8%. and it continues to move in the right direction. Importantly, as a part of that duration of unemployment, long-term unemployment, more than 26 weeks, more than half a year, has also turned over and come down. So we're making progress. Manufacturers continue to move forward, and activity around manufacturing continues to move forward in this company. The debt-to-income ratio among households has dropped down to about 12% from its high of 14% as consumers have gotten their balance sheets in better shape. Consumer optimism, still at low levels, has stabilized and goes up, and so it goes up and down with the news of the moment, but it continues to push forward in the United States. Consumer spending has been very solid. Since May of last year, we've seen continuous year-over-year, comparing the month of 10 versus 9, and now the month of 11 versus 10, growing of 5% or better each month. The aggregate amount spent by consumers exceeds the amount spent at the height of the 2007. So the consumers are spending. Now, what's driving that is about a 7% growth we saw in 2011 March versus 2010 March. About 1.5 points of that is the gas prices. So we'd consider that non-fundamental. The rest is just core spending going through. So we're seeing consumer spending, and that shows that they have confidence. And so even though unemployment remains high, and that's an issue we've got to deal with, a large part of the consumers are making more money than they did the year before, think they're going to make more money next year. The stock market's up in spending, and that optimism helps drive the economy. The business sector has been pretty remarkable, and I congratulate all the business leaders in this room for what they've been able to accomplish. We went through the most serious economic crisis we have since the Great Depression. Businesses came through it, making money, got efficient, got themselves in a position to store cash, and have done a fabulous job. The activity in the capital markets is about as strong as it's been. We have more tech IPOs in the pipeline than we had at the height of the internet boom. We have M&A activity. We did 2 deals yesterday morning that were announced. There are other deals announced. We did 2 of them. We were pitching all over IPOs. The capital markets, debt capital markets have been among the strongest. Why? Interest rates are low, and a lot of activity is going to refinancing. But as we've seen now, some of the activity is going to acquisitions and other types of activity. But what we don't see is a lot of good core organic financing need, and that's the unusual thing. So we're seeing lots of this economic activity go on in the capital markets, but we're not seeing businesses come and say, I need to buy equipment, or I need to have my line increased. And the reason why that is they are very efficient, and they're taking every dollar cash and using it wisely, and those of you in the business community know that. So that leads to a question of sort of what's sort of holding back business, and it is still this uncertainty. It's uncertainty about commodity prices, uncertainty about customer demand ultimately. It's uncertainty about policies and procedures. But it's also a second thing, which is growth outside the United States. So if I asked you to raise your hands and said, how many people here are business leaders who have operations, consumers or companies that buy from them outside the United States or manufacture outside the United States, or all combinations, that most of you would raise your hand. And that opportunity in Asia and Latin America and other places is the opportunity business continue to go after. So what that leads us to is an overall growth rate for the United States of about 2.5%, as I said, 1.5% this quarter, moving up to 2.5% for the year. But that's against the growth rate that we see in the economy in a worldwide basis of 4%. So if you think about the impact of Europe and America holding back that growth rate, which are together two very sizable economies, and then you think about what India and Asia, all of Asia, Latin America, Russia, and parts of Africa are driving. Think about how much you have to drive to lift the economy to a better than a 4% worldwide growth rate. And lots of businesses are taking advantage of that. The issue is that doesn't bode well for the U.S. economy in terms of growth of employment, but it bodes well in business profitability, which is a good thing. The economic downturn in Massachusetts has been difficult. Housing and construction, although not overheated that we saw in some of the other markets, have been hit, and they will continue to lag because, frankly, the population is growing fast enough to have a lot of new housing take place. And so we are doing all we can as a company to continue to make credit available, to continue to provide capital markets access, and to continue to provide credit to consumers to help drive the economy. But this is going to take some time. The growth is there. It's fundamental. Consumers are spending. Businesses are waiting to figure out how to take advantage of the opportunities. And so what we see is we are optimistic. We remain optimistic. But we have to worry about unemployment, and we have to make sure that American businesses stay competitive on a worldwide basis. Let's move to the state of the banking industry. In order to have a good economy, we need, as a bank, to provide a platform for it. We reflect the economy, and the economy reflects us. It's a tautology that is proven over and over again. We are making progress. Year over year, earnings in the banking industry continue to go up for 6 consecutive quarters. Our asset quality in all our portfolios continues to come down, which bodes well in terms even on the mortgage side is that delinquencies have come down, and we have a group of customers that we need to work through, but the new customers coming in delinquency are much lower. Charge-offs are lower in every lending category. Lending trends continue to improve slightly. In other words, that if you take out what we charge off, you actually see growth in consumer credit. In the commercial side, you're seeing middle market companies' usage of the line start to come up a little bit, but it's very modest at this point, and we expect it to remain modest until the general economy picks up. Meanwhile, there's lots of cash, and the bank industry is reflecting that. Deposit levels are at record highs. We're at the highest we've ever been in a company with over $1 trillion of deposits at Bank of America. And so you're seeing cash store ups, the cash is there to go back in the economy. Banks have raised more than $350 billion of capital in the last couple of years. Our capital ratios are the highest levels they've been since World War II. And the TARP dollars have all been paid back by the mainstream banks and will be paid back, and there'll be no loss in that overall as projected by Congress. The government is actually continues to have, the FDIC continues to deal with problem banks, but if you look at what's gone on, in last year 157 institutions failed, total assets about $96 billion. This year, so far, 26 banks failed, $10 billion. Now, put that against an industry which is $10-12 trillion, so it's a relatively modest impact. So the banking industry has recovered. The upside of that healthier banking system is that we drive the economy, and hopefully we can make loans and credit available in a way that helps the economy grow. I want to talk about a few ways that we help the economy here around your markets. First, in community development, we continue to invest heavily in low to moderate income neighborhoods in many ways, given the realities of housing, to continue to drive the growth in those neighborhoods. We have a 10-year, $1.5 trillion commitment to drive development in communities. We've done $5 billion. That's $5 billion in Massachusetts in the activity against that program the last couple of years. Philanthropy is another way we drive the business. We gave away about $12 million in this market last year, and we've continued to do that year after year after year. Our volunteerism is one of the things I'm most proud about as a CEO. Our associates volunteered 1 million hours last year. And April is our volunteer month, and we expect them to see their impact. Not only it goes throughout the year, it doesn't do justice to call it a single month, but whether it's City Year, Cradles to Crayons, and many other activities, the associates continue to make me proud every day in terms of what they do on a volunteer basis across the economy. And even on the situation in Japan, our associates have given over $300,000, which we've matched in addition to $1 million we gave as a company, to show you how concerned they are about what's going on over there. So that brings us to one of the toughest issues we all face, which is the housing issues and the foreclosure crisis that is going on. Our job is to help financially distressed homeowners. We continue to do that. We try to help them keep their home because that's in the best interest of everybody involved, the investor, the consumer, and our company. The problem is that the delinquent mortgages and the falling home values have led to a very difficult situation that we face as a country, and it's the last part of the cycle we're now working through. So helping to solve is a top priority. We continue to make progress. The institutions, my colleagues and I have led institutions that have modified 4 million mortgages since 2008. We've done about 850,000 of those. We did 64,000 this first quarter of 2010, and we continue to work hard on that. Over the past 2 years, we built up 30,000 people to work with clients that are in stress in the home. So we went from about 5,000 or 8,000 people up to 30,000 people to work on this, and we continue to add resources as we speak. But homeowners are having a hard time. They do want to pay us. When they don't pay us, it's the same reason they've always not paid us: divorce, sickness, loss of job, loss of wages, things like that, which are the issues that I've seen for the 25 years I've been around the mortgage finance business. And so they do want to pay, and we try to work to help them do that. We're looking for every idea that's out there to help drive this thing forward. There's lots of ideas. Some of them will work, some of them won't work, but we continue to work with many parties, including, as Bill referenced, the various regulatory groups, and trying to structure efforts to help this along. Earlier this month, we announced some expansions of our activities across the country. We're going to open up more regional assistance centers, face-to-face centers, so people can talk to us face-to-face. We have one in Dedham that we opened last July, and we've expanded we've done about 650 outreach events in the last couple of years. We'll do about 400 more this year in connection with community groups, including Bruce Marks' NACA group here in Boston, to continue to get face-to-face with consumers and try to help them through this process. In some cities where it makes sense, we've donated low-value properties back to the city. In Detroit the other day, we donated 100 properties to be taken down, and we also donated 10 to be given to policemen who are going to move back in the city limits because, as you've heard, their city suffered about a 25% decline in population in the last census period. We've announced mortgage modification programs for the U.S. military, trying to make sure that people engaged in the theater of war, or theater of combat, I guess, should not have to worry what's going on at home in our economy in terms of protecting their families. We consider principal write-down in that program, and we continue to offer. We offer other programs on principal write-down, largely where the product set, adjustable rate mortgage and stuff, give rise to that. One of the things that we are clear on is we don't think principal write-down is a panacea, a cure-all for this issue. It has the issues of fairness because we have customers that paid us versus and customers that haven't that look exactly the same. So who do you do it for? It has issues of people who became leveraged at the high point in the cycle and took out cash. And so we continue to try to educate people that we haven't seen it had an impact where we've done it on future default rates, and also that there's a huge issue for the vast majority of the people who are paying their mortgages. But we're at a crossroads. We've worked hard with all these programs to modify. We continue to do that. We'll continue to do that as no people come into delinquency. The redefault rate on our modification programs has crept back up, but we're reaching a point where we need to move forward, and that's what we're trying to do. Last year, when the foreclosure issues came up, we reviewed our processes and got them in shape so that we could stand behind them, and every customer thought they're being treated fairly. And now we're back into the process of trying to resolve the group of customers that we need to resolve over the next several years. We hope to do that through the most cooperative way, most dignified way, including short sales or deeds in lieu instead of foreclosure, and we'll do it any way that the customer can do that's most helpful to them. The issue is we're now 4 years into the housing downturn, almost 5, frankly. The house prices stopped depreciating in the third quarter of 2006. So it's time that we have to get through this. It will take a lot of work. We're standing here to do it the right way, and my commitment on behalf of Bank of America is we'll continue to work with anybody who will help us get this done. To sum up, we had a tough economic decline, but the good news is United States overall, Massachusetts are all recovering. There are external events which continue to make that recovery go up and down. The rise in energy prices and some commodity prices have held back the growth that we thought we'd get in the economy this year, and people have lowered their estimates. But it is growing. It is growing. Most importantly, we continue to pursue issues to help, as the banking industry is healed, to help move the housing crisis forward, and we'll continue to do that. So going back to what Thomas Willing said to the Bank of Boston colleagues that started the bank in 2004, he said the following: "You should proceed without fear. To men of your knowledge and business, every difficulty will vanish. The only true and useful secret is to conduct the business so as to acquire the full confidence of your fellow citizens and neighbors." It may seem obvious thoughts about business to think about getting the trust and confidence of your citizens and neighbors, but every year, after 230 years, every year and every day and every week and every month, that's what we do at Bank of America. Help people achieve their dreams and help gain the confidence of our citizens and neighbors. Thank you, and I'd be happy to take questions.